of the UK, and I guess I've waited a couple of days. I don't want to kind of keep posting things on a daily basis just to again say the same old thing. And I guess waiting for the non-farm payroll, which is something I generally don't trade anymore. I guess it's a bit of a nonsense figure for me now. It just is creating low-paid jobs, and it's on a kind of a fairly steady trend, and it's not really kind of telling anybody anything about the data or anything about the conditions in the US. So really back to trying to get a new idea. And I was explaining this to a client today about the things I've written over time, and especially things in my book about the 80-20 rule of trading, where the markets will move 80% of the time in a technical manner and 20% of the time due to new kind of information, data and sentiment. And I guess really now we're into 50-50 really. We're trying to understand what the sentiment is throughout the stocks, throughout the FX and the kind of safe havens like gold, and then trying to really kind of drill down for ourselves where the opportunities are. Because if you keep trying to kind of short every high in the stocks like the DAX and S&P, generally if you hold it for any more than a couple of days, you're going to get squeezed out of position. And it's not that's a new thing. It's happening for the best part of 8 years. So it's going back to this idea of what that 50% now means for that kind of sentiment and what's driving the market. So that 50% idea of how you can make some money. So firstly, what I'd stop saying is, stop selling the stocks. There'll be a big correction in the stocks, and I guarantee you'll miss it and start to buy it and you'll lose money. The big correction is not going to come just yet, and even if it did and I was wrong, you're probably not going to make as much money as you think. The money comes from doing the obvious, the percentage trades, which is just the DAX demonstrates here. Get down to low fibs and daily points of attraction and buy the dip, and the market consolidates. That's your money right there. So again, it's looking at the hourly charts, looking for these gaps. Perfect opportunity here with RAN, etc. For the markets to sell off aggressively, but they don't. The Fed steps in, the 1% steps in. Trump gets on the phone, gets on Twitter and says, nope, that's not enough to make the markets correct. Buy. Market consolidates. Any kind of gap is closed, and the market goes higher. So at this point now, we're at a gap in the DAX has been closed, but I guess that's just a courtesy close. The market really has rejected any down movement, and it's only going to go on to make new highs. So going through the different time frames, this could easily turn out to be quite a nice formation for the gaps to stock up, gap up on any, and kind of like build up momentum on any kind of good news, which is all by, again, as I've kept saying over the last week, Trump's own doing. So any good news from the China trade deals really, should be priced in. Trump caused the trade war, and all the effects have never been known. And they won't be known, these things, for months, probably years, until after Trump's no longer president. All he wants to do is push the markets up, again, for his own gain. He's been on Bloomberg today saying that he wants to change the way that data is released into the market and the way, news agencies have access to publish these things. Why else would he do that? Why else would he do that? What's he going to do with Donald Trump? He's meant to be independent, running the country, not running the Fed, not interfering with the stock market. This is every opportunity here for the markets to gap up higher. And again, we have to really kind of like start going to the dailies where you see, again, the pattern every time the market's rejected higher, building up momentum to go higher. And the weeklies, well, I mean, again, look at the DAX. We're just primed to make new highs. Why wouldn't it? Why wouldn't it make new highs? NASDAQ, S&P, all the stock markets are making new highs, so go with it. Expect the unexpected. So don't start buying the market here, expecting the market's going to break down and just go on to make new highs. Look for the low point value down here. All your fibs are opportunities to buy low. And again, speaking to clients, and to other kind of traders that I mentor, it's trying to do the opposite. So if there's big red candles happening here, then you have to be averaging in. You have to be buying low when those candles are red, because red candles, as we see, turn to green. And it's just as simple as understanding that 50% fib rule. I mean, look at this here. Where's the 50% of this red candle? Okay, here. That's where the market finally decides it wants to make a new high. We do obviously break down low, but again, longer term trading, and the market moves up. If you want to do it the opposite way and try and get an idea of the fibs, do it the opposite way. So again, it's not perfect because we made a new low here, but again, that's algos. That's just kind of messy trading to really kind of put your pure technical analysis off the scent. What we see is the same thing. The market finds support above the 50%, and we get to the 161. 261.8. So the 423.6 full Fibonacci expansions point that, yeah, support, support, support. We go on to make a new high, which is just about the weekly and monthly kind of tops in the DAX, the overall high. So it's telling us where the market's going to go. It wants to make a new high. If you want to see where the fibs will project that new high above that, then you have to do a fib higher up the range. But the last significant opportunity to sell that was rejected was back here on the 6th of Jan. Went on to make, again, the market grew back up and got that momentum and went higher. So, I mean, I guess the DAX is a little bit out on its own because it's not directly controlled by America, but it follows the S&P, it follows the NASDAQ. So we've got downward channels, if you want to call them, kind of flags, whatever. I don't really kind of care too much, for them kind of, putting names on these kind of things. You should know instinctively what a market is trying to do, what it's trying to show. And this market is struggling to go lower, but it is going lower. So for me, these are opportunities to break to the lower points, especially down here in the Nasdaq, down to these low levels at maybe 8985. Quickly break through, find some support back here, and then go up. Now, again, there's another kind of idea that some other people put through on Twitter. And it's this idea that the sentiment things are always good. Well, sentiment things are always good, and again, like my bias, it's no different. It's no different than I guess things like RSI and DMarker, etc. I can't invent an indicator that isn't lagging. It's impossible. It takes previous data. So when you look for the opportunity when the markets are at these very low points to buy, then what you're looking for is the market to break lower from these points very, very quickly, and then that's your opportunity to buy. So this works quite well on the hourlies. We see some low points, but again, there's lots of conflicting data. Again, look at the dailies, building up these big momentums to sell, but the markets again come in, and from unknown factors, be whatever they are, things I've already said, the market's bought back up and goes to new highs. So you can't really always rely on these kind of lagging indicators, for the full picture, and you never could do. So always when you're looking for a technical into a market, you're looking for maybe, a close below the 50% on the fibs, maybe looking for, some consolidation and some kind of, confirmation of your move towards, these kind of, extremes of the market. But as I say, there's all these little things that you have to look in the different time frames. Like, we've closed below the low point in the 5 minutes. This is quite a bearish signal. We're below the 50% on the 50-minute. We're below the 50% on the hourly. So all these things are pushing lower. But it doesn't mean that necessarily I think that's a bearish signal to just go ahead and sell. What I'm saying is the overall trend is up. So let the market overextend to these low points, which are going to be around... again, very, especially in the S&P, not many kind of levels to really go at, to be honest, because we've broken up so high and so quickly. So you kind of fibs are looking down here at maybe 3262. I don't think it just, breaking one or two candles that quickly, but we have seen that before. But I'll be looking for is either, if you definitely think this is the top of the market, everything now the market knows and the markets now are going to sell off, then absolutely feel free to sell. But I would still say the overall value trade is to pick off some of these low points and buy it while it's hanging in the air, going down to these low points and buy those dips. Remember, only ever really looking for 10, 20, 30, 40 pips. That's, really what, you're going to make your money. Trying to be right on direction and, hold on to these things. You're going to leave money on the table. So the stocks, it hasn't really changed. I don't see any new news coming into the market that's going to make the market sell off and hold. So it's always buy the dips. I think gold is, again, an interesting one. It's trying to make inroads higher. And the same kind of, scenario. We had this big kind of spike up in Iran, and what was Trump going to do? Well, he does what he always does. He escalates things of his own making, and then turns them on his head and says that he's fixed them. And then the markets then, sell off or correct in a way that kind of overcompensates. So we're really, kind of down that 1,550 kind of mark, which is, again, quite a pivotal moment right now because we've got that 1,600 level, which is psychological, will push us towards that, again, that goal, I guess, of 2,000 and new highs. Or we've got the idea that, yes, everything that bad keeps happening in the world, somehow it's always sorted out, and gold is no more than a safe haven than just another way for the 1% to store some sort of wealth. So getting back to that 1,500 mark could be much more of a interesting, significant kind of overall catalyst of the markets than just, the stock market's making record highs every other day. So I would say what I would be looking for with gold would be, again, the opposite, so a spike up. And really just looking at that could be as simple as, from the kind of where we're trading now to these lows, getting up above 1.5 kind of 63, again in these kind of spike upward movements and the market drifting off. I just think this is hedge funds and the bigger players building up short positions, knowing that really anything that happens to Trump, net it's a positive. If he stays in, it's a positive for stocks. If it doesn't get in, there's going to be some time to still push the markets up before any kind of policies by Warren or Biden, all these other kind of people think they're going to break up all the tech companies and kill the stock markets. There'll be time. So, and if it did, gold I guess would inevitably have to go towards 16, 17, 1800 just as a natural kind of hedge against the stocks. But I think that's just so far away from happening that any kind of spike in gold is still a real good opportunity to be selling intraday high. And this is the whole point. Again, I can't stress enough. We're not looking for where the market's going to be today, tomorrow, next week, next month. It's what's going to happen on the hourly, 15-minute, 5 minutes that could get you that 20, 30, 40 pips that are going to, again, make enough money for you to take that good trade intraday. The pound, I called this yesterday, so you can see that on Twitter. I was speaking about, again, one of the Bank of England members saying that it might be time to discuss a cut. Utter nonsense. We've just had Brexit, which is meant to end the entire world, or a no deal, and we've skated around all that. We've saved it. There's no time now just to start cutting rates in an arbitrary fashion in January. Mark Carney is the master of cuts. That's all he's done. He's a one-trick pony. So the rest of his team getting behind it is not new news. So as I would say, the market gapped down and went lower. But as I say, we're reaching back up to that 50% on the kind of hourly. So all that news now has been discounted. And it was all on the back of any bad data. We could talk about a cut. But already, 2 or 3 days after that, the market's already rubbished that and said January's not really the day, or the time of a cut. So you have all the opportunity now to get back into the previous range. And for me, that could be really, where we've looked in the past, previous high to low, back to the 50%. I still think we're looking to get back to 131. US still not kind of moving on kind of rate hikes or cuts, much more distracted by Trump and his nonsense. So I think really, this kind of downward channel has every opportunity to break and go back up. And again, I only buy the pound low, so I'm naturally biased. By all means, sell it. At the end of the day, what I'm trying to do is tell you my explanation for what I'm thinking and what's the most logical way of making some short-term money in an overall trend, which is down in the pound. But recently, because of Brexit and the way the kind of Tories have come back into full control, I wouldn't say it was uber bullish, but it's not uber negative. So where we're at the bottom of the range, and we've had all the kind of bad news discounted, I still think a lot of people are long from these lower points. The people that are short from these higher points, once we start heading back to kind of 132, 33, 34, 35, and getting kind of good support, I've always said I still think we're back at 140, 145, in the next 18 months. So again, someone's going to be right, someone's going to be wrong. But in the short term, again, in your 15 minutes, you've had opportunities galore to buy the market low, when consolidations has happened and the market's gone up. So again, it's not about being right, it's about being right at the right time. The euro, not much love in the euro as always. Again, it's another dismal attempt to keep rates low and waffle about inflation. Nothing's really been done. Nothing's really kind of done to change the situation in France. The kind of problems you've got in Germany with integration. The kind of protests in France, the protests in Spain. It's a very fractured community, the European Union right now, and Brexit's happening. And Brexit's the final nail in the coffin for me, because the UK, no matter how you look at it, it's still a major world power. And it said, goodbye, we're going to leave the European Union. Now you have to get on without our money, our support, and our interaction. There's a whole risk of contagion. Everyone jumped into the euro when Trump got into power. But Trump turned out to be, the best thing, since sliced bread for the markets, because all he did is direct the money from the poor to the rich and, cut the taxes and pump money into the stock markets. So that was a bit of a failed endeavor, safe havening against, volatility in the euro, and the dollar, and putting it into the euro. So I think the euro for me is definitely topped out. And I've said it a million times, parity is going to happen in the euro much quicker than it's going to happen in the pound, if ever. And I think the euro is in real trouble, as it has been for a long time. So looking at the hourlies, we're close below the 50% on the iView charts, 50%. Again, found resistance here back up on the 100%. So for me, I think a little attempt to break that 50% again, and then down, 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 down. And all I see is that that slow grind down to parity, because I don't think Brexit does anything positive for the European Union whatsoever. I don't think anything positive comes out of the European Union, full stop. Okay, so the dollar, I guess, as I've said, what do? You buy the dollar low. Plenty of opportunities. It doesn't matter what the catalyst is. It's the world's currency. Yeah, Japan, it's got no chance of recreating the glory days. It used to be a safe haven. It's now nonsense. You know, they've got 10 people going for every job. You've got women saying they're going to retire in poverty. They've got empty houses they can't fill, an aging population they can't recreate, and a very different culture that can't bring Westerners in. So where's the growth coming from? It's not. Zombie state, zombie economy. You know, 20, 30, 40, 50% of the major stocks are held by the government. Zombie nation. That's what the what Japan is for me. So it's going to beat the US. Absolutely no chance. So again, every opportunity going through all the points of the low points of the dollar. It's an upward trend. Keep buying it low, and that's going to work for you intraday. As I say, every time we're holding above this 50%, look for it to break up. You got your iView levels in here. Bang, bang. We're getting above 111, getting back to 114, which I think is an absolute kind of staple in the dollar yen. And that's just what's going to happen. It's always great, isn't it, talking about these things, because when I say it, it's always doing the opposite, and that's how you make money. It's not going against the trend. It's going against the overall sentiment of news analysts and people that don't trade, and just saying, fine, I won't sell it then if I think it's too high. I'll buy it when it goes back low. So the mantra doesn't really change. You buy dips in stocks because that's what's worked. You sell gold high because that's what's worked. You buy low in the pound, you sell the euro high, and you buy the dollar over everything because what's going to replace it? Certainly not going to be Bitcoin, is it, anytime soon? So when you're talking about the world's major currency, maybe a resurgence on oil because of the US potential drop in output, and this idea that this Greta Thunberg's going to change the world and we're all going to be, kind of driving snail-powered cars and all that kind of crap. Not going to happen, okay? Oil's going to be around for the foreseeable future. It will bottom out, I think, at probably 50. I don't think it'll get above 70 for any sustained period of time. There will be some consolidation, and that's why the Saudis are getting out. That's why they've got the, Ramco and these big global funds. People are getting out of oil because it won't be around forever, but the price is controlled. It's a monopoly. It's not just going to suddenly drop into inexistence and not be a valuable commodity. It will always be a transitional, period, and that will be decades. So again, why you've got the 1%, the politicians all controlling these things. Nothing's going to drop like a stone because there's too much money to be lost. So it's all about steady eddy, equilibrium, deflection on this, a little bit of a war here, a little bit of tension there. That's what the markets are all about. Don't lose focus on what you're trying to do, and that's at 10, 20, 30, 40 pips, and that's buying overextended moves downwards on the stocks and then selling overextended moves upward on gold, and again looking for value on the low side of the pound, high side of selling for the euro, and the dollar basically buy it anywhere. Now, all sounds very simple, but people try to overcomplicate these things. They try to look for too many technical reasons, trying to understand fundamentals. They don't, right? I'm not saying the world system is rigged, but when you've got the 1% and 26 people having half the money of the planet, then these things don't always move as you think. The markets are designed to make you think you're wrong at a specific point in time and then do exactly what you think. Your job as a trader is to be able to be patient and then get moves within moves. It's not about being right. It's about being right at the right time. Picking those 10, 20, 30, 40 pips, 2, 3, 4, 5, 6 times a day in one of these 8 products, and that's it. Now, if you've got iView charts, it's relatively easy because all the fibs, all the levels, the pivot points are all done for you. If you've got my mentoring, you can ask me questions directly. I'll tell you exactly what I think. I'll tell you exactly what I can do for you. Very, very simple. Just open an account with Black Bull Markets. You get 5-to-1 leverage. You get access to all the things that I've done over the last 20 years that have made money. And again, why wouldn't you? Why wouldn't you look for the smartest way to make money, getting that edge? And that's having the leverage, having the charts that draw the technical analysis for you, and speaking to somebody who probably just done a bit more in trading than you have, and it's helped people go from small accounts to big accounts to mega accounts. Now, again, it's all free. I'm still looking for my next fund of the year, so anybody who can do 3 to 5% a month upside with limited downside and create some decent volume, I will turn you into a fund. That's how I make my money. Anyway, I'm not going to post these things every day because I don't want to kind of sound like a broken record, but I certainly will post a couple of times a week. Again, get me on Twitter at Steveruffley or add me to Skype, Steveruffley. Google Steveruffley. Anything to do with Steveruffley, that's me. I'm not a difficult man to find. So ask me any questions, test me out. Again, it's free. What have you got to lose? Okay, hope you enjoyed it, and I'll catch you again in a few days.